This episode is sponsored by City Traders Imperium. CTI is a prop trading firm looking for profitable Forex traders who need more capital. CTI will back its traders up to $2 million, which is the most in the industry, and thousands of traders worldwide are trading their capital remotely from their own home. It's the most flexible funding provider in the industry, where any strategy is welcome and overnight or weekend positions are allowed. Plus, CTI doubles your account every time you hit 10% net gain, which you can scale up to $2 million. Click the link in the description to find out why City Trader offer the best funded trader program in the industry, or visit citytradersimperium.com. All right, folks, here we are on Trading Nuts YouTube channel. We've got Austin from Imperial Fx here. He's sitting there with a McLaren in the background. Welcome to the show, mate.
Then the Lambo's there.
Oh, right. You don't mind a bit of that in Florida, do you? Having the cars parked in the office.
No, it's cool. I'm kind of trying to give you a little tour here. So.
Oh, wicked.
We got there's screens here, ping pong table. Oh, there's the desks for the traders over there.
Oh, superb.
Keep the cars in here, and then there's like a whole opening section over there. So it's actually pretty interesting, man. We have 4 guys in here. All of them I've taught myself, and they're all doing really, really well. And we're actually expanding next month, and we're going to be moving to an office double the size. We're going to do a lot of in-person training, add more people in, and we've got a lot of big plans in the future. So super cool. We're definitely looking to take this to a big route, not just the typical route that is seen commonly. We got a lot of plans.
Hey, look, you just told me a fantastic story about a guy flipping, what was that? One of your students flipping 1,000 to 600,000?
Oh, yeah, 10,000 to 600,000 in 9 months.
Wow, that's crazy.
He took 6 months of pure practice, just nonstop, talking to me every day, like annoying me almost to the point of asking so many questions. He went live on January 1st with $10,000. Today, that account sits at $600,000.
Really?
600K. I'm not making this up. He has it like fully documented on his Instagram. It's absolutely insane.
Now, we're going to walk through something on your price chart today, right? So you're going to show us basically how you take your trades on the US30. So guys, I'm going to hand it over to Austin. He's going to walk us through the account chart, and then we'll jump back on here afterwards. So over to you.
Let's do it. So this is a trade that I took today, actually. And this isn't going to be using all of the confluences that I would typically aim for in a perfect trade. So this is not a perfect setup, but a setup that paid very, very well. And had a great risk to reward. So how it worked was I was watching price this morning. So let's go here, 9:30. Here's the market open, and we could see that we are in between these 2 key levels here. So those key levels are 28,000 and 28,200. I'm always going to put more emphasis on key levels that end in 1,000. So 28,000, 29,000, 27,000. And so on. That's always going to be stronger for me than something like 28,200 or 28,300. You can see here this key level doesn't have a box around it. So the key levels that don't have boxes around them are what I consider weaker levels. I always put boxes around levels that are more significant. And you can see how my levels have at least 200 pips in between them for my main stronger levels. So at market open, we were above this key level here and below this one here. So we are in a new trading range. So I'm not looking to take any trades in the middle of a range ever. I always want to make sure that we have either the top or bottom of a range before taking a position. And I was pretty much just watching for a price to reach 28,200 and then see how it reacted from there. So I trade on the 5 and 15 minute time frame, and I look at the hour as well for US30. We could see at the 200, we had an MA that was floating a little bit higher at 28,275, and we really only had this key level as a confluence. So I really didn't like this setup as much. So I just let it do its thing, and it fell below 28,000. So when it fell below 28,000, I was just simply looking for the retest. So we had the break here, and then we had this candle come up just ever so slightly at 28,991. I didn't take that. I decided to let the trade play out a little bit further. And then we had a weak key level at 27,900. I was considering taking the retest here, but I just didn't like it, again, because we were in the middle of a range. So I figured if I'm going to be taking this trade today, I'm going to wait for the higher probability. I'll wait for it to come back up to 28,000, and I'll take it from there. If it doesn't hit it, oh well. But if it does, I will take it. So we could see here that price ended up retracing, coming back up to 28,000. We have a moving average paired with a key level, so I have at least 2 confluences better than 1, and I ended up taking my short position there. So I'll just grab my position tool and show you how this looked, or what this looked like. So if we put our entry at 28,000, and I don't believe on TradingView that it actually hit 28 exactly. On my broker it did. So this trade did play out. The high of this candle was 27,997.4, and this one was 29,997.2. On my broker, I was able to get filled at 28,000, but I entered manually anyways. And my stop loss was 50 pips. Let's go ahead and put that in. And my take profit, my final take profit, was 27,700. So we can see that that's the next key level. So basically, I'm just looking for it to play this range completely. So we had a 1 to 6 risk to reward here with 0 drawdown. So price came down. It gave us around 50 pips. 50 pips is going to be my TP1. So I pulled out a good chunk of my position here, moved my stop loss to break even, and then I just let the rest ride from there. So we could see that price came down. Let's grab the ruler. Price came down 262 pips from entry in an hour. So that's a nice move. And then it pulled back up to the 27,900, approximately like a 50% retracement. And then it ended up falling down lower and actually smacked through the take profit and went much further. It actually ran 500 pips, even a little bit more. But yeah, my full exit would have been at 27,700. And yeah, so I'm basically just waiting for those levels to hit if they're not approaching as resistance. So let's just say we had moving averages, a fib, and a bunch of other nice looking things here. I would have taken it short right on contact. But in this example, this is going to be a very common way that I enter the market, is when it breaks a key level and comes back up and retests it as well as another confluence. I'll take that trade there, and that's exactly what I did today. I risked 50 pips and was able to catch 300 off that move total. So this is a go-to setup for me. It's really not that difficult. It's a very high probability, and that's exactly how I played the market today. This is something that I'll look for every single day, along with just price approaching a level with other confluences as well. Here we only had the level, so it wasn't as nice, but luckily we were able to grab this key level moving average combo and take it short from there.
Nice.
Something that I want to say is that I'm actually short only on US30. I don't look for buy setups at all. I feel like I naturally am able to spot short setups a little bit easier, and my long-term bias on the U.S. equity markets is short as well. So those two things just kind of happen to add up, and I only take short setups. So you might be thinking, well, you must not trade very much then or anything like that. I actually get a setup a day pretty much. I take 3 to 5 trades a week. So that's more than enough for me, and it lines up with all my rules perfectly. So I'm short only, and this met my criteria, so I took that trade, and I was able to capitalize on it. So got to take the risk or lose the chance, and that's what we did here, and it worked perfectly.
And so is your stop loss always 50 pips, or do you change that?
So yeah, that's something that I've kind of just implemented recently. I used to actually have a hard stop of 100 pips, and then I would manually intervene before. But I did some back testing on my setups, and I realized that whenever a trade is running 50 pips in drawdown, it's usually going to run the full 100. So I figured I might as well just cut it in half and just let it run from there. So right now, yeah, I'm just running 50 pip hard stops, and I'm just taking it from there.
Nice, brilliant. Well, look, guys, Austin, first of all, thank you for coming on the show. This has been fantastic. We did a great podcast as well. I mean, tell the guys how can they get hold of you?
Instagram, Austin EDAL. Imperial Fx Academy. Those are the 2 accounts that I use. So the first one is AUSTINEDAL. The second one is Imperial Fx Academy. Instagram is definitely the best way. We have a full signal service as well with chart analysis, trade management, as well as a full academy on Imperial Fx. If you want to connect with me personally, Austin EDAL. I don't really post too many trading related things on my personal page, but that's how you can reach me. It's definitely the quickest way to connect with me personally is through a DM on my personal page.
Brilliant. Well, look, thank you once again, Austin. Guys, if you do want to check out the interview we just did with him, which went for about 50 minutes, full of golden nuggets, go and check out the link underneath the video. Do hit subscribe while you're there and click the notification bell and click all so you get videos like this in the future. Thanks for watching. See you in the next one.